Hi, good morning, my dear students. Today we are going to study a new topic. Here, some mistake is happens, and we have to rectify that mistake by a journal entry. Okay, last year we studied one chapter is there, rectification of errors. Here also. We are studying some mistakes are happens, and that mistake we have to correct by writing journal entry. Here in page number this, if whenever the error is happens, that error we can correct according to our syllabus. We can correct in two ways. One is by giving only one journal entry. If how many mistakes are there, for all the mistakes we will find out the net effect of that all the mistakes, and we will pass only one journal entry. That is one method. And the second method is, if 5 mistake is there, we have to write five journal entries. Like that we have to write. So this we are studying under this heading, past adjustment. The past adjustment means some adjustment we took that became wrong. We closed the books of accounts, we prepared final account, and balance sheet also we prepared. After that only we are understanding that some mistake is happened. So that we are studying under this past adjustment. And here some examples are given. This is when interest on capital or interest on drawing may have been omitted. They forgot to give interest on capital or interest on drawing. When profit and losses have been distributed among the partners in a wrong proportion. They distributed it but in a wrong ratio. In the wrong profit sharing ratio they have distributed. When profit sharing ratio has been altered with effect from some past dates, means they already changed the profit sharing ratio, but we did not consider, without considering that a new ratio, according to the old ratio that we distributed. Salary or commission payable to a person has been omitted. So this type of errors, whenever it is happening, then that we can solve by two different way. Here it is mentioned this A and B. By passing a single adjustment entry with the net effect of the errors and omissions. Suppose there are 4 errors are there, so we will make one table, and by making that table we will find out what is the net effect of all that errors, and we will get one amount. Then from that amount we will pass only one journal entry. That is the first method. Then second method is by passing separate adjustment entries for each error and omission. If 4 omissions are there, then we need to pass at least 4 journal entries. Okay, 4 or more journal entries we have to pass if 4 errors are there. So most of the questions are coming under this category by passing only one adjusting entry. Okay, so for solving this type of questions, first of all we will understand the question and what is the omissions made, we will find out. Then we will make one table. That table is known as a table showing adjustments, and from that table we will get the net amount. Then by seeing that net amount we can pass the journal entries. Okay, whenever we are solving the questions you will get a more idea. So question number now today and the continuing 2-3 next day also we will be solving only this type of questions only. So we can read one question. Question number 41. After the accounts of partnership have been drawn up and the books closed off, it is discovered that interest on capital at the rate of 8% per annum as provided in the partnership agreement has been omitted to be recorded. Their capital account at the beginning of the year stood as follows: A 80,000, B 40,000, C 3 lakhs. 8 lakh, 4 lakh, 3 lakh. Their profit sharing ratio was 2:1:1. Instead of altering the balance sheet, it is decided to pass necessary adjustment entry at the beginning of the next year. So the mistakes that you understood, I think they forgot to take interest on capital and they have prepared a capital account and balance sheet also prepared. So what is the capital account? It is shown in the balance sheet is not correct because interest on capital is not taken there. And another effect of that mistake is, if interest on capital is not taken into the capital accounts, then this is not taken to appropriation account also. That is why they have distributed more profit. Interest on capital is an expense, it is an appropriation. Whenever interest on capital we are taking in the appropriation accounts, divisible profit is decreasing. So in this question we understood that interest on capital is not given, not taken. That is why they have got more profits. Okay, they received more profits. So here two things we have to consider. One thing is interest on capital, we have to add it to the capital. That is the one thing. And the second thing, they got some excess profit, because I told the reason, because interest on capital is not taken in the profit loss appropriation account. Because of that they got more profit, so we have to cancel that much profit also. So two things we have to make it. Okay, so here we are making a table showing adjustments. You see, I will explain that one. Question 41. Then here a table showing adjustment for how many partners are there, that much column I given, A, B, C, 3 partners are there. Then first of all I written there for crediting interest on capital. In the question it is mentioned that they omitted to give interest on capital. So interest on capital we have to credit it to the partners capital account, or we have to take in the credit side of their capital accounts. Whenever we are taking interest on capital on the credit side, it is known as a crediting. So interest on capital we are crediting to their capital account. Whenever I return here A, this means A is capital. Okay, A is capital, B is capital, C is capital. So I have written here, I calculated how much interest on capital is coming for the respective partners. So A it is coming 64,000 and B it is coming 32,000, C it is coming 24,000. This interest on capital we are crediting to their capital. That is why I have written there CR means credit. Okay, this all are we have to credit. Then this only the mistakes actually given in the question. But one more thing is that the other effect of this mistake is interest on capital is not taken in the appropriation accounts. Hence they got some excess profit. So that much profit we have to cancel now. Okay. So what is the total amount of interest on capital? This 64, 32, 24, whenever we are adding it is coming 1,20,000. So they got 1,20,000 rupees more as a divisible profit. So that much amount we have to cancel in profit sharing ratio. Divisible profit they are distributing in profit sharing ratio. So in the second line you see what I written, for cancelling excess profit already distributed. Excess profit already distributed, that you understood now, because interest on capital is not taken in the appropriation account. So they got some extra profit, some excess divisible profit they got, that we are cancelling now in the profit sharing ratio. So this is 1,20,000. Where from this 1,20,000 is coming? This is the total amount of interest on capital. That amount we are in the profit sharing ratio for cancelling. Actually divisible profit is coming in the capital account credit side. Then it is increasing the capital. But whenever we have to cancel, we have to debit it. That is why I written here debit. So debit, this 1,20,000 is 2 upon 4, 60,000 is coming. Then 1 upon 4, 30, and this also coming 30,000. So two statement is written and their amount also here. Then after writing these two things, we have to see this two amount. Then CR and DR. So we have to take both are opposite. Debit and credit both are opposite. That is why we have to take it's a difference. Okay, we are not adding. If it is a debit, this also debit, we can add it. But this is a credit, this is debit. So we have to take the difference. Whenever we are taking the difference here, 64 is there, here 60 is there, 4,000 is the difference. And if a credit is more, you give here credit. Okay. And for B column, 32 credit is there and debit is 30. So 2,000 is the difference and credit is more. That is why here also written credit 2,000. And for C partner, debit is 30 and credit is 24. So this is more. And its difference is 6,000. So after writing the 6,000, debit was more. That is why here debit is written. and this is known as a net effect. Net effect of that two statement return, and this two statements net effect will be we have to credit this A's capital, and we have to credit this B's capital, and we have to debit C's capital. That we have to make a journal entry. From this net effect we have to make a journal entry. That is our answer. So the adjusting entry will be this which account we have to debit? This account. So C's capital account debit. The amount is 6,000, and A and B we have to credit. So 2 A's capital, 2 B's capital. A's amount is 4,000 and B's amount is 2,000. Okay, this is the solution. And here we passed only one journal entry only. Okay, if you are following that second method, for each mistakes, if you are passing one entry, if you are writing, then in this case 2 entries you have to pass. One will be for interest on capital, 1 entry you have to write. After that, for cancelling this extra profit, 1 more entry. 2 entries we have to pass in the, if you are doing the question in the second way, second method. Okay, now today onwards, today we are seeing only this first method only. So I hope this answer you understood. If you did not understand, please watch the video this much once again. Okay, now we can go to the second question. So the same step will be we are following. Whenever we are hearing many questions I solved, and when I am giving the explanation, then easily you can understand. It is a very interesting. So question 42. Okay, I am reading the question, you just follow. A, B, C and D are partners sharing profits in the ratio of 2:1:1. They distributed the profit for the year ending 31st March 2020, rupees 9 lakh, without providing for the following. Salary to A at the rate of 15,000 per month. Salary to B and D, rupees 30,000 per quarter to each partner. Then give necessary adjusting journal entry. So here in the previous question interest on capital was given, but here salary only given. Interest on capital they did not forget to give. Interest on capital is not there. Otherwise it is there, that they have considered already. Okay, so they are telling that without providing for the following, this salary they did not take. How we solved the previous question, the same way this question also we are solving. Then first of all, that salary we are crediting, you can see the answer. Here 4 partners are there, that is why A, B, C, D, 4 columns. Then for crediting salary actually we are crediting to their capital account, that is why it is written there for crediting salary, and their respective salary is written 1,80,000 for A, and B and C same amount. It is given according to the question only it is taken. It is 30,000 per quarter, so multiplied with 4, that is why, and multiplied by 4, then 1,20,000 is coming, and this A's salary will be 15,000 per month, so that is multiplied with 12, then 1,80,000 is coming. So we are crediting, and C is not getting any salary. Okay, C's salary is not mentioned, that is why this column is empty. Then after that, like the previous question, here also, whenever they forgot to take the salary in the appropriation account, they already got some excess profit. Okay, more profit they have received. This we have to cancel. So the statement you see, for cancelling excess profit already allowed or already distributed, that will be the total of this salary. So the total of this salary will be, I have written here 4,20,000, and in profit sharing ratio this will be distributed, and this is for cancelling. We have to cancel from their capital, that is why we have to do debit. Okay, then we debited this 1,40,000, and here also 1,40,000, and here 70, and here also 70 is coming. Then we are taking the net effect. Net effect, how this amount is coming, once again I will tell you. If this is the credit and this is debit, we have to take the difference. If this is credited, this also credited, then we have to add it. If it is opposite, subtract. So we are subtracting these two, then we are getting the answer 40. And if CR is more, then write here CR. If DR is more, and for the difference you write DR. So here 1,80,000 was more, that is why here we can write CR. Then whenever we are comparing these two, DR is more, that is why here DR is written. 1,40,000 minus 1,20,000, it is coming 20,000. Then in C's column, no CR and the full amount is DR only, so the same amount is written 70,000 and that is a debit. And C's column, CR is more, credit is more, so that is here credit is written and the difference is 50,000. This is a net effect. Then by taking this we can write one journal entry. Okay, that journal entry will be wherever the debit is there, that you debit. So B's capital account debits, C's capital account debits, B's capital account, C's capital account debit to A's capital to D's capital. Okay, that is the answer. And regarding the narration, in the previous case we can write adjustment in respect of interest on capital omitted, and here also adjustment in respect of salary omitted. Adjustment in respect of salary omitted. Then one more thing, in the solution, in the test book the question is solved when you are seeing, in addition to this partners column, one more column they have made, that will be total column. That column I purposefully missed. Without that total column also we can solve it. That total only I have written here. Okay. Then if we are solving this question, already 4 columns are there, and if we are making one more column, then here space problem is there. That is why for all the questions I am not giving that total column here. In the test book, whenever they solved, they have prepared one total column also. Whenever you are referring the test book, you may think that why I did not make that column. That is why I am telling. Here you see table showing adjustment, and here partner A, B, C, and here one total column also they made. This column I am not making. Without that column only all the questions solution I am giving. Okay. If anyone want to follow this method, you are welcome. I have no problem. Then we can go to the another question. So 41 we solved, 42 also. Then 43 I am giving you as a homework. I just give some small explanation regarding that question. 43 will be homework. Okay. This will be homework. Then I will give the explanation. A and A, B, C are the partners sharing profits and losses in the ratio of 1:2:3. They have omitted interest on capital at the rate of 8% per annum for 2 years. Years ended 31st March 2016. 2 years ended 31st March 2016. Their fixed capitals were 4 lakh, 6 lakh, 8 lakh respectively. Pass necessary adjusting entry. And here in the previous question, it is like this question only. Here we are taking only 1 year's interest on capital. Whenever you are solving 43 question, you have to write for crediting interest on capital for 2 years. So how much interest is coming for 1 year? Take it's a double amount. That is the one thing. And the second thing, what is the total of all the interest? That much we have to cancel. You have to debit it. Then find out the net effect. And by seeing this, you can write the journal entry. Okay. One more new thing is there in that question is in this question it is saying that their capital account is fixed. This one. Their fixed capitals were 4 lakh, 6 lakh, 8 lakh. Whenever the capital account is fixed, interest on capital is going to current account. So whenever we are passing the journal entry, in the journal entry instead of capital, we have to use the current accounts. If for this question we solved, this question we solved, 41 we solved, if their capital was fixed, then here the answer was C's current account debited to A's current account to B's current account. In the place of capital, we have to write a current if a capital is fixed. So in this question 43, you make the table showing adjustments, net effect is getting, and by taking that net effect, you pass the journal entry by using the current accounts, not the capital accounts. 43 will be homework. Now we are going to question number 44. Okay, let us read the question. A, B and C are partners sharing profits and losses in the ratio of 5:3:1. After the final accounts have been prepared, it was discovered that interest on drawings had not been taken into account. The interest on drawing of partners amounted to rupees A 8,000, B 6,000, C 4,000. This is not the drawing amount, it is the interest on drawing amount. Then give the necessary adjusting journal entry. In the previous case, it was interest on capital and in salary, and here it is interest on drawing. Then before going to the solution, you think about where the interest on drawing we are taking in the capital account, or interest on drawing what we are doing, debiting or crediting to the capital accounts. Interest on drawing we are taking on the debit side of capital accounts. Then capital account we are debiting. Okay, capital account we are debiting, and interest on drawing we are crediting. So here we are thinking about the capital account only. So capital account we have to debit it. In the previous question, here we have written there for crediting interest on capital. But this question, whenever we are solving, we have to write for debiting interest on drawing. So here for debiting. For debiting interest on drawing. Interest on drawing, no need of calculating because in the question it is given. So that is taken there. 8,000, 6,000 and 4,000 is coming for debiting interest on drawing. Then next statement will be interest on drawing, where it is coming the appropriation account. It is coming on the credit side, and this will be income for the firm. That is why whenever the interest on drawing, now whenever we are taking this one, this much amount, how much amount is coming? It is coming totally 18,000. So 18,000, that much amount it will increase in their divisible profit. Okay, so 18,000 an amount equal to 18,000 we have to distribute in profit sharing ratio, and this we have to credit it. So here for debiting, so here we are debiting. Because interest on capital we have, interest on drawing we have to debit their capital account. So this we are debiting. Then interest on drawing, you see the statement for distributing extra profit arising due to interest on drawing. Interest on drawing is the income. That income now we are considering. So 18,000, that much amount of profit is increasing. So that profit we have to distribute among the partner. To distribute the profit among the partner, capital account we have to credit it. And otherwise where the profit we are taking in the capital account. Divisible profit we are taking in the credit side. Credit side when you are taking, it is known as a crediting. That is why here it is written there. For distributing extra profit, to distribute profit we have to credit it. Okay. So first one we are debiting and the second one we are crediting. Then the net effect will be, here the difference of this two will be 2,000 and credit is more. That is why here we are giving credit. Then here both the amount is equal. So no effect here. And here debit is more. Debit is 4,000, credit is 2,000, the difference is 2,000. Then this will be debit. Now we can go to the journal entry. This will be debited. I written the journal entry already. C is capital account debited. This is 2,000. B we are not using the journal entry because it is not affecting B whenever that two statement we are considering. And A is capital account, we have to credit 2,000. Okay, narration that you can write. So this is the solution of question 44. Then next question I solved 45 will be homework, because all the question there is no need of solving. You can try that one. 44 I solved now, so 45 will be homework. Then 46 also will be homework. You try it. If answer is not getting, you ask me, then I will solve it. Our next question is 47. Okay, listen to that question 47. Anil, Sunil and Sanjay have omitted interest on capital for 2 years ended on 31st March 2015. Their fixed capitals in 2 years were Anil 8 lakh, Sunil 7 lakh and Sanjay 3 lakh. Rate of interest on capital is 10% per annum. Their profit sharing ratio were in first year 4:3:2 and in second year 3:2:1. One question I given homework, that is Question number 43. In this question also 2 years interest on capital they missed. So in this question also 2 years interest on capital is missed. But in the question number 43, there the profit sharing ratio of the both the year are same. But here it is different. That is why this question I selected to solve. Okay. Now here we can take a 2 years interest on capital. We can take separately or together also we can take. Okay. So I taken here separately. Then you can see how the solution is coming. 47. Table showing adjustment. Name of the partners Anil, Sunil, Sanjay. And 2014 and 2015, these are the years. So firstly I written 2014's interest. For crediting interest on capital for 2014, the interest on capital when you are calculating, it is coming 80,000, 70,000, 30,000. This we are crediting in the current account. It is a capital account is fixed. So here Anil means Anil's current account, Sunil's current account, Sanjay's current account. That is the column title. Then this crediting to the current account, we have to credit the interest on capital. They forgot to give the interest on capital. That is why now we have to credit in their current account. So it is written there CR credit. Okay. Now the same year itself, the total of this amount is coming 1,80,000, and when they forgot to take interest on capital in the appropriation accounts, they already got some more profit, more divisible profit they already enjoyed. They got that much extra profit that we are going to cancel now. That is why next statement is coming to cancel excess profit already distributed. Okay, so 1,80,000, that much amount of profit they got more in profit sharing ratio. That is why we are cancelling. Okay, for cancelling the profit which is already given, we have to debit it. So that 1,80,000 is the total of this interest on capital that we are debiting in profit sharing ratio. Profit sharing ratio is 4:3:2. So whenever we are calculating that amount, it is coming 80,000, 60,000, 40,000 respectively. Then we are going to next year. 2015 also same amount of interest is coming that we are crediting. Then second year's profit sharing ratio is 3:2:1. First year is 4:3:2. So second year is in this ratio, that total amount of interest on capital we are debiting. Then we are making the net effect. Okay, whenever we are checking the net effect, here DR is more. In the Anil's column, debit amount is more. This is coming 1,70,000 is coming debit amount, and credit amount is coming 80 plus 80, 160 only. So 10,000 was the difference, and debit was more. That is why here debit is written. Then here 20,000 difference is there, and credit is more. That is why here credit is given, and here debit is more, and with the 10,000, that is why this is coming. Then the journal entry will be here. The capital account is fixed. That is why we are using the current account, and the debit to account we have to debit. So Anil and Sanjay we have to debit. So Anil's current account debit, Sanjay's current account debit to Sunil's current account. Narration you can write. So this is the answer of 47. So whenever you are doing this question number 43, you can take the interest on capital for 2 years, and how much the total amount is coming, that amount you can debit in profit sharing ratio. Okay, you can take that amount together. Now we are continuing. The next question is 47 is over. 48. Okay, this will be homework. It will take hardly 5 minute time only for solving. This 8 is a homework. Now 49A we are going. 49A, you listen the question. On 1st April 2015, the capital account of A and B were 4 lakh and 2 lakh respectively. They divided profit in their capital ratio. Profit for the year ended 31st March 2016 were 3 lakh, which have been duly distributed among the partners, but the following transactions were not passed through the books. Interest on capital, that they forgot. Interest on drawing, the drawing amount is given. not drawing, interest of drawing is given, then commission to B is this much, and A is to be paid a salary. So here interest on capital is there, interest on drawing is there, commission is there, salary is there. So these things what we are doing in the capital account, that is statement you have to write a debit or credit, that you have to write. Then and in this question we solved already some questions we solved. The one of the main difference that we can see in this question is, in the previous questions net profit, the profit it is not given in the question. Okay, whenever we are solving from question number 41 onwards, their profit of the year was not given, but in this question the profit is given. They divided the profit in the capital ratio. Profit for the year ended 31st March is a 3 lakh. Okay, profit is given here, and this profit is already distributed. So whenever we are solving this question, this profit already distributed, we can cancel that profit firstly. Okay, we are cancelling this profit firstly. After that this one A, B, C, D we will consider. Then we will debit or credit that we will make in the capital accounts. After that the effect of A, B, C, D that we are adjusting from this 3 lakh, then we will get the correct divisible profit. Then that divisible profit we are crediting in the profit sharing ratio. That is the step we are following here. Okay, if a profit is given, that profit is already distributed without considering this partnership deed conditions, that is why profit already distributed we can cancel in the which ratio they have shared. In that ratio we can cancel it. Okay, the previous question profit was not given, so this question we are doing something different way, and the step you can see here. Name of the partner A, B. Then to cancel the distributed profit, okay, they already some profit is distributed. The profit which is given in the question is 3 lakh. 3 lakh they distributed without considering this interest on capital, interest on drawing, commission and salary. That is why that distribution was wrong. That is why we are cancelling in the beginning. So to cancel the distributed profit 3 lakh in profit sharing ratio, to cancel the distributed profit we have to debit it. So we are debiting that then the amount is coming 2 lakh and 1 lakh. After that we are allowing the appropriations one by one. Interest on capital what you have to do, we have to credit in the capital account. That is why here credit is written, credits, and this amount 48 is coming when you are calculating, and for B it is 24,000 is coming. Then interest on drawing what you are doing with the capital. In the capital account we are taking on the debit side, that is why here it is written debit. In the capital account this interest we are debiting. Then what about the journal entry? Journal entry will be capital account debited to interest on drawing. That is why we are debiting here. Debit this interest 12,000 for A and 10,000 for B. Then commission for B only given. Commission also what you are doing in the capital account we are crediting. Commission we are taking on the credit side. So that you are doing here credits. Then salary, A only getting the salary. Salary also we are crediting in the capital account, so that we done credits. Then so the things they forgot that everything we work out here, we done. Then now we have to find out the divisible profit. The profit already distributed 3 lakh we cancelled. Then we can find out the divisible profit. And for finding the divisible profit, this 3 lakh is the net profit. From the net profit to the net profit we can add interest on drawing. In the appropriation account what are the items coming in the credit side we can add, and debit side what are the items is coming that we can subtract. We already prepared that appropriation account, we know how to prepare, so that you remember once again. So interest on drawing we are adding to this 3 lakh and other things, interest on capital, then commission, then salary, this are deducting. Then we will get 1,80,000 as the divisible profit. Okay, this 1,80,000 is coming. Net profit plus interest on drawing, and interest on capital, salary, commission we are subtracting. That we are doing in the appropriation account. If you are making appropriation account, then we will get 1,80,000 as the divisible profit. Now this 1,80,000 we have to distribute. This is the divisible profit. We have to share among the partner in profit sharing ratio. So in 2:1, this 1,80,000 we are sharing, we are distributing. Now we are not cancelling. That is why here we are crediting. Distributable profit we are crediting in the capital account. So here credit 1,20,000 and 60 we are crediting. Now we can find out the net effect. Okay, So when I calculate net effect, here credit is more with the 6,000 and here debit is more with the 6,000. Then the entry will be coming. It is saying that they passed the entry on 10th April. That is why I have written that date. You are required to pass a journal entry on 10th April 2016. That is why given the date 10th April 2016. Entry will be this debit. B's capital account we have to debit. Okay, B's capital account we have to debit and A's capital account we have to credit. The amount is 6,000. Okay, so if a profit is given, remember if a profit is given, we have to cancel firstly. Then after making the missed items, lastly we have to find out the divisible profit. Divisible profit we have to credit, and to cancel the profit we have to debit their capital accounts. Now we are moving to question number 50. Question number 50. A, B and C are partners sharing profits in the ratio of 2:2:1. Their fixed capitals were 4 lakh, 2 lakh, 50,000, 1 lakh respectively. Net profit for the year ending 31st March 2017 amounted to rupees 2,20,000, which was distributed without providing the following. Salary to B 5,000 per month and to C 10,000 per quarter. Interest on capital at 6% per annum. Commission to manager at the rate of 10% after charging such commission. Pass a necessary rectifying entry. So here the new thing is this one. Commission to manager, that is a 10% of after charging such a commission. So net profits 10% out of 110. That much amount we have to give to the manager. So manager we did not give the commission, that is still outstanding. So we studied to credit the outstanding. If any outstanding is there, that account we have to credit in the adjusting entry. And here whenever we are solving the question, here 3 partners are there and one more column we have to make that for the manager. So here 3 partner A, B, C, and this column is a manager's commission outstanding. Okay, manager's commission is not paid, it is still outstanding. That is why one more column we made. Then here the step will be like the previous question. Firstly the net profit, the profit which is distributed we are cancelling first. To cancel the distributed profit, 2,20,000 was the profit that we cancelled in profit sharing ratio 2:2:1. That is why we are debiting among the partner only. That profit we did not give it to the manager. Okay, manager is getting commission only, so profit manager will not get. So this profit distributed among the partner only. That is why we are cancelling among the partner only. We are debiting. After that, manager's commission written there. Manager's commission, this is 2,20,000 is 10 upon 110. That written in the manager's column. Manager's commission is not paid, it is still outstanding. That is why manager's commission account we have to credit it. That is why here credit is written. Then interest on capital that we are crediting to the partner's capital account, and here the capital account is fixed. That is why this we can read as a current account. A's current account, B's current account, C's current account. Interest on capital we are crediting to their current accounts. Then salary, 2 partners are getting. Here regarding the salary, question is saying that B's salary is per month, so it is multiplied, then we got 60,000, and C's salary is per quarter, so we multiplied with the 4 and we got 4 into 1000, 4 into 10,000, 40,000 is the total salary. Then after doing this much, then we have to find out a divisible profit, and divisible profit is coming 55,000. Okay, for getting the 55,000 we done this this much calculations. This is 2,20,000 minus this firstly the commission we deducted, then interest on capital all the partners we deducted, salary to both the partner we deducted, then we are getting 55. Then this 55 we are distributing in the profit sharing ratio 2:1, and now only we are giving the divisible profit, so we are crediting. This is not the cancelling. Firstly we cancelled the profit distributors, so here we can distribute the correct divisible profit, so here we are crediting. Then as usual what we are doing to get the net effect, this we are checking which is more, debit or credit, and here debit is more with 42,000, and here this credit is more with 9,000, and here C this 13,000 is more in the credit, and manager's commission also it is not paid. So in the journal entry we have to take this also, that is why here this same credit will come 20,000. Now we are moving to the journal entry. In the journal entry where the debit is written, only one account only we debited, that is A's current account. So A's current account debited with 42,000 this amount. Then B's current account, C's current account we credited, and manager's commission outstanding also we credited. So this is the answer of question 50. Then we are moving to question number 51. 51 also something different question, that is why we are solving, otherwise this may be homework, but I am solving this one. 51 you can see. Suresh and Ramesh were partners in a firm sharing profits in the ratio of 3:2. Their fixed capitals were Suresh 9 lakh and Ramesh 6 lakh. The partnership provided for the following: interest on capital at the rate of 5% per annum, rupees 60,000 per annum salary to Suresh, and salary rupees 2,000 per month to Ramesh. The profit earned by the firm for the year ended 31/3/2016 was 2,34,000. The profit were divided equally without providing for the above. Pass adjustment entry. And here the profit is divided equally. And the profit sharing ratio, the correct profit sharing ratio is given, it is 3:2. Compared to previous question, this is the new things. They already divided the profit, that is equally they distributed. That was wrong. If they are distributing, it should be in 3:2 ratio, but they have distributed equally. So whenever we are cancelling the net profit, we have to cancel equally. Okay, in this ratio we have to cancel. And lastly, whenever we are getting the divisible profit, in this ratio, this is the correct profit sharing ratio, in this ratio divisible profit we have to distribute at last. Okay, so first line in the previous question also we written now to cancel the distributed profit. So here we have to cancel question number 51. Question number 51, firstly, to cancel the distributed profit. Distributed profit is given 2,34,000. So this we have to cancel in which ratio? That ratio will be equal, because in the question it is saying that it is equally distributed. So in 1:1 ratio. Okay, that we have to debit. So 1,17,000 and 1,17,000 we debit their capital account for cancelling. Then interest on capital we have to credit, that we done there. Then salary also we credited, that also we taken there. Then after that we have to find out the divisible profit. Divisible profit is coming 75,000 in this way. 2,34,000 minus this interest on capital and this both the partners salary we deducted. So from profit we deducted this appropriations and we are getting 75,000. Then this 75,000 we have to distribute in which ratio? The correct profit sharing ratio. In the question the correct profit sharing ratio, it is given this one 3:2. There the profit were divided equally, that is why we cancelled. At the time of cancelling we used equal proportion, but whenever the divisible profit we are getting, we have to distribute in the correct profit sharing ratio in 3:2 ratio. So here we can write 3:2. Okay, then that we have to credit, because the divisible profit when the capital account we have to credit. So after writing that one, net effect we can take. So the net effect is coming here, credit is more, that is why 33 we are getting, and credit is more, we put their credit, and Ramesh column debit is more, that is why the amount is the same only. Then in the journal entry, capital account is fixed, that is mentioned in the question, that is why in the through the current account we are writing the journal entry. So the entry will be, this is debited, Ramesh is debiting, so Ramesh current account debited to Suresh current account, amount is this 33,000. Then question number 52 will be homework. 52, it is a similar type of question only like a 51 only. You try If you are not getting, you can see the illustration also. So question number 52, we note it as a homework and a try. Okay. Now question number 53. 53. A, B and C were partners in a firm. Their capitals were A rupees 1 lakh, B rupees 2 lakh and C it is 3 lakh respectively on 1st April 2017. According to the partnership deed, they were entitled to an interest on capital at the rate of 5% per annum. In addition, A was also entitled to draw a salary of rupees 5,000 per month. C was entitled to commission of 5% on the profit after charging the interest on capital but before charging the salary payable to A. The net profit for the year ended 31st March 2018 were 3,60,000 distributed in the ratio of their capital without providing for any of the above adjustments. The profit were to be shared in the ratio of 2:3:5. This is the correct profit sharing ratio. And in which ratio they already distributed the net profit? In the ratio of their capital. So capital is 1 lakh, 2 lakh, 3 lakh. So the ratio of capital will be 1:2:3. So in this ratio, the profit they have distributed, that net profit they have distributed. So whenever we are cancelling in the first step, in this ratio we have to cancel. And after getting the divisible profit, we have to use this ratio. This 2:3:5 ratio. So question number 53 is the solution. If we understood this 51, this 53 is a symbol only. We can see firstly, to cancel the distributed profit, the net profit 3,60,000, it is already they received. That is why we are cancelling. In which ratio? This is the capital ratio. 1:2:3. In the capital ratio they have distributed. So we are cancelling. For cancelling the profit already distributed, we have to debit their capital accounts. That is why here debit is given. So their respective share is 60, 120, 1,80. The total 3,60,000 is cancelled. Then next, interest on capital. This we have to credit. Okay, respective amount. Then salary. A's salary is coming 60,000 and C's salary is coming 16,000. Sorry, actually salary is A only getting. Then C's commission is this one. C's commission question is saying that 5% of profit after reducing interest on capital. Okay. So interest on capital total is coming 15 plus 5, 20, 20 plus 10, 30. So 30,000 we are subtracting from 3,60,000. 30,000 we are subtracting from 3,60,000. Then 3,30,000 is coming according to the question. It is saying C was entitled to a commission of 5% of profits after charging interest on capital but before charging salary. So only interest on capital we can deduct from net profits. How much amount is getting? It is 3,30,000. Then 5 upon 100. Then we are getting 16,500. This is a C's commission. Then after that we have to find out what is the divisible profit. Okay, divisible profit will be from 3,60,000. We have to deduct the appropriations. Here interest on capital is there, salary is there, commission is there. These all are the expenses or appropriations. We are deducting from 3,60,000. We will get 2,53,500. This is the divisible profit. I have written here divisible profit. And this we are distributing. So we have to credit it. In which ratio? The correct profit sharing ratio. It is given at last of the question. It is a 2:3:5. So this amount distributed accordingly, their profit sharing ratio. After that, net effect we are taking in this way. Then A is credit is coming for A, and for B debit is coming, and for C debit is coming. And always whenever we are writing any journal entry, its a debit total will be equal to credit total. Okay, so you can check whether it is correct or not. Here both the this two debit is there. This debit total amount is matching with the credit total. Okay, so the entry will be here capital account is fixed, I think. No, here capital account is not fixed. That is why here current account I used, that is wrong. So sorry. So here it will be B's capital account debit, C's capital account debit to A's capital account. Okay, current account will not come. Here B's capital account debit, C's capital account debit to A's capital account. That will be the answer. Okay. Then 53 is over. Then we can see question number 54. 54. I am reading. The partners of a firm distributed the profit for the year ended 31st March 2016. 1 lakh. The partners of a firm distributed the profit for the year ended 31st March 2016, 1,50,000 in the ratio of 2:2:1 without providing for the following adjustment. So this is the net profit is given. This is already distributed in this ratio, and these are the actually according to partnership deed, these are the conditions. A and B were entitled to salary of 1,500 per quarter. C was entitled to a commission of rupees 18,000. A and C had guaranteed a minimum profit of rupees 50,000 per annum to B. So this is the new things for you. That is why I selected this question. Then profit were to be shared in the ratio 3:3:2. So this is the correct profit sharing ratio, but by mistakes they have distributed in this ratio the net profit. So whenever we are cancelling in the first step, this ratio we have to use. And lastly, after getting the divisible profit, in this ratio we have to credit their capital accounts. Okay. So only in this question the new thing is this one, that A and C had guaranteed a minimum profit 50,000 per annum to B. So whenever the divisible profit is coming, we have to ensure that B is getting at least 50,000. If a more amount is coming, no problem. But if a less amount is coming, then how much amount deficit is coming, that we have to take from A and C. Okay, from A's share and C's share, we have to take how much amount less is coming for making the 50,000. How much amount less is coming, that much we have to cut from A and C. Okay, so we can see the answer 54. Here firstly the name of the partner ABC, and firstly I cancelled the distributed profit. The net profit is this one, 1,50,000. The cancellation time, the which ratio they have distributed in that ratio, it is debited. Okay, so 60,000, 30,000 is coming, their respective share of net profit that we are cancelling. Then salary two partners are getting, it is 6,000 and 6,000 for A and B, and the commission for C it is coming 18,000. It is given directly that amount, and that salary was 1,500 per quarter, so it is multiplied with 4, then only this 6,000 is coming. Then after that we have to find out the divisible profit. Okay, so these are the salary is there, commission is there, interest on capital is not mentioned in the question. Then from 1,50,000 we deducted this amount, these appropriations we deducted, then we are getting 1,20,000. Okay, 1,20,000 is the divisible profit. So divisible profit. Then according to the profit sharing ratio, the question is saying that the profit should be shared 3:3:2. This is the profit sharing ratio, 3:2. This is the profit sharing ratio. And here whenever we are calculating, then what is the B's share? B's share is how much? 3/8. Okay, whenever 1,20,000 is the divisible profit, from 1,50,000 we deducted this one, then we got 1,20,000. This is the divisible profit. Then on divisible profit, whenever we are taking 3/8, it is coming 45. How much is the guaranteed amount? It is 50,000. So 5,000 is less. Okay, so whenever we are calculating 1,20,000 his share, it is coming 45,000 only. Then 50 should be there. So 5,000 rupees less. So that this is the deficit amount I written. Okay, deficit amount is 5,000. Then from A, you see this one, profit sharing ratio between A and C. This is A's share, this is the B's share. So if any deficit is coming, that should be bear in this proportion, means in 3:2 ratio they have to from their profit they have to give in this proportion. A and C, that deficit amount how much is coming to B, that A and C should take in this proportion 3:2. So the deficit amount is coming 5,000. So 5,000 in this ratio whenever they are taking, it is coming 3,000, that is I have written from A. B should get 3,000 from A and B should get 2,000 from C. Then only 45 plus 3 plus 2, he is getting this 50,000. So that 50,000 are written here. Okay, I hope you understood how the 50 is coming. Whenever we are calculating on 1,20,000, it is coming 45. 5,000 was a deficit, and this 5,000 is the responsibility of other two partners, A and C. In what proportion? The ratio between A and C is 3:2. This one 3:2. So in 3:2 ratio, this deficit amount is 5,000. They have taken. So 3,000 from A, this will cut and we will get it. And C also deduct 2,000 from, and B is getting this much money. Now B is okay. Okay, B got the guaranteed amount. Now for A's share, on 1,20,000, A's share is 3/8. Okay, so 3/8, whenever we calculated how much amount is coming from there, this 3,000 we have to subtract. So A's share is coming, whenever we are doing, it is coming 45,000. From 45 we deducted 3, then this 42 is coming. Now for C, C's share is 2/8. 2/8. So 2/8 of this divisible profit 1,20,000, it is coming 30,000 is coming. You just calculate it is coming 30,000. From 30,000 this 2,000 we deducted. Why this 2,000 deducting? Because according to the guarantee given by C, C should give 2,000 to B. That is why from 30 this 2 is deducting. And this is the new things, and two partners are guaranteed a minimum profit to one partner. So this is the one new adjustment for you. Then after that, as usual, we can take the total of this one and the difference. Actually here debit is more with and the difference is 12,000, and here this B also debit is more, and for C credit is more. Then the journal entry I did not return. I did not write the journal entry here, and the entry will be this one. Here the capital account is fixed or not. It is not mentioned anywhere. Their capital also not given. So the entry will be, if nothing is mentioned, it will be fluctuating capital. So the answer will be this one. A's capital account debit, B's capital account debit to C's capital account. That will be the journal entry. Then okay, one more question. Time is there. One more question. This one. In that also one new thing is there. Here I am reading the question. A, B, C were partners in a firm. Their partnership deed provided that a profit shall be divided as follows. First 60,000 in the ratio of 3:2:1. Remaining profit will be shared equally. Actually this type of one question we faced in appropriation account, and we solved one question also. So it is not a new things for you. Then other things. The profit for the year ended 31st March 2019 were 1,50,000, which had been distributed among the partners. On 1st April 2019, their capitals were A 4 lakh, B 3 lakh, and C 2 lakh. Interest on capital was to be provided as 8% per annum, which was omitted to provided before distribution of profit. So here the one mistake is there. Interest on capital they did not give. They forgot to give. So this answer will be these things are shown very clearly in the solution, that you can understand from the solution. So firstly, three partners are there, A, B, C. Then first of all we have to cancel the distributed profit. The profit they have distributed, it is given 1,50,000, and it is given two category. In the 1,50,000 first 60,000 they are distributed in this ratio. So I have written that amount separately. Total profit was 1,50,000. So 1,50,000 I divided into two parts. 60 first 60,000, then balance amount above 60 is coming 90, and 60 are distributed in this ratio. I cancelled. Okay, they already distributed the net profit. That was wrong. Net profit not a divisible profit, they have to share. So net profit we are cancelling. First 60,000 in this ratio we debit in their capital accounts. Then the above 60 the profit was 90, that is equally it is a cancelled. Okay, so this two is for cancelling the net profit. The next one for allowing interest on capital for crediting interest on capital. So their respective share of interest on capital is a creditors. Then after that we are finding the divisible profit. So to get the divisible profit, 1,50,000 minus this interest on capital whenever we are doing, the answer is coming 78. 78 is the divisible profit. Okay. Then from the 78,000 we have to distribute actually in this way. First 60,000, then above 60,000 it is 18. Then 60,000 we are distributing in this ratio. The same ratio 3:1 we are crediting. After that 18,000 is the above 60, the amount is coming 18. 18 equally we are distributing, that we are crediting. This is the divisible profit we are allowing now, that is why we are crediting. After that we are taking the total of this one, and after then credit is more there, that is with 8,000, and B debit and credit is equal, so no effect for B, and C it is coming 8,000 debit. Now the journal entry will be this one, C is capital account debited to A is capital account. Any doubt is there? You just once again you watch the video, and it is not very much difficult. You understand the concept clearly, then you will get the answer. Thank you.